So, Sean, I would like to talk about conversations that are happening around real estate. And everything I'm hearing is, don't house prices have to come down because interest rates are going up? Are you familiar with that concept?
I'm familiar that is not a real concept.
Oh, that's really good. I feel like sellers are afraid to put their house in the market because they say buyers don't want to buy because interest rates are up. And all the buyers I've worked with never include a desire for a certain interest rate when they desire a home. So how are those conversations around interest rates affecting home buyers in the mortgage world?
I mean, if somebody's buying at the very tip top of what their budget is, of course an interest rate is going to affect you a little bit, right? Mm-hmm. But in most cases, people are buying homes because they had babies, they got kids, they want to be in a school district, they're moving to town for a job, or whatever the case is.
Desires and priorities.
Desires and priorities.
Right.
Life is going. Now, obviously, once they get to me in our conversation, the conversation is, what's the rate going to be? Because it affects their payment. But it's not a deal stopper or deal maker. It is simply what it is, and we try to get you the best deal we can.
Right.
So a lot of people got lucky over the last couple of years, right? And we're going to have good times again, but it's not going to stop you from buying or selling.
No,
it shouldn't.
It shouldn't. Right. Your choices that you want to make about your address should not be affected by the interest rate because you still have desire and priority, like I said. So the conversations that people are having with me, oddly, are, well, I think the housing market might crash and there'll be all these foreclosures because of interest rates going up. Any truth to that you've seen based on your experience in the mortgage industry?
They're saying foreclosures?
Yeah, foreclosures. So, which is, I mean, that's a whole different conversation. I mean, because that has to do with jobs. However.
Well, that's what I was just going to say.
Like that comes
yes, there's
else.
other things in the economy that can affect us, but it's not the interest rate that caused you not to make your payment. We knew what that was when you got the loan.
Right.
And I want to throw in there, too, some historical trends that you can go back since the 1970s, tracking recession, Feds raising their interest rate, etc., and what that does to mortgage interest rates. Mm-hmm. And every single time following a recession and Fed rate hikes follows a real estate boom.
So
the only time there was one exception, and that's because the recession was caused by housing.
Right.
That was an anomaly, and that is not what we're experiencing today.
Right. So recession and housing market don't always go together, and an interest rate doesn't cause a housing recession, so to speak, like people think is going to happen.
People are still buying and selling homes. In fact, all this is doing is going to make the market a little healthier. It is not healthy to have 80 offers in 7 hours on every single house that hits the market.
Believe me, I know. I've had plenty of buyers who struggle to get homes because of that market. So having some pressure eased, just if there's less buyers and less offers and less competition, that's a great thing if the market somewhat becomes more normal. But interest rates don't change people's plans, I don't think, in terms of changing their address.
Every single person that I pre-qualified prior to the rates going up have come back around because it's the buying season. It happens every single summer. And hey, can we get my pre-approval updated?
Right.
What's my payment going to be now?
Right.
Oh, that's a little higher than before. But hey, we got to get a house.
Right. And bottom line, they're not stuck with that interest rate forever.
Absolutely. Again, I don't have a crystal ball.
Right.
But every single expert's out there saying we're going into those times. The Feds have hiked their rates, which is a good thing for mortgage, not necessarily some other things, but that just shows investors that they're trying to curb inflation. That puts money into bonds, which drives mortgage rates down. So we're hoping by this time next year, a lot of people are going to be able to refinance and get their rates down. But luckily, they bought the home now at the lower price because homes aren't coming down.
So basically, if I say, I'm going to wait till interest rates go down in the spring, is there an advantage to that?
Well, you might save a couple dollars on what you think your payment's going to be, but you're going to pay more for the house, so you end up making the same payment, and you lost all the equity and amortization that you would have been gaining over the last 12 months.
Okay, so it sounds like it's still a really good time to buy.
Still a good time to buy.
Yeah, and if you don't like your interest rate now, just wait 6 months, and it can get better.
Times will get better.
Yeah.
It's the same thing for the past 6,000 years. Opportunity mixed with adversity.
Right, exactly.
But right now, there's opportunity.
Right.
Tammy Campbell, you're awesome.
I appreciate all your insight, Sean, and I think that getting rid of the rumors in the market is what people need to work on. Take our information, do some more research, but we're both here to help you. Tammy Campbell with Impakt Realty at Keller Williams, and
Sean Hutto on Q Financial.
thank you.